So because I understand that inflation's out of control, it makes me say, I need to keep my money in real estate.
Obviously, over time, holding property is where you make the most
Holding anything,
money.
whether it's stocks, property. So think about that, right? Now imagine if, I don't know, let's say 5 or 6 years ago, you started trimming some of your portfolio, right? How much money would you have potentially left on the table?
Yeah, like tens of millions of dollars.
All right, Dan, one of my favorite quotes in the world. I want your opinion on this. The big money is not in the buying and selling, it's in the waiting. Take that quote, break it down, give me your thoughts on it.
Who said that? Is it yours?
No, it's not mine. I wish it was mine, but it's not. I heard it somewhere. I don't know who to quote, but
so you're saying that obviously over time, holding property is where you make the most
holding anything,
money.
Whether it's stocks, property, gold, Bitcoin, whatever, right? That's where you make your money, is over long periods of time. I think the reason for the quote is like, people don't have the patience and mentality, generally speaking, to just sit on their assets for a long period of time.
Yeah, I would agree.
Now, I know for you, like you own a significant real estate portfolio. I think we've talked about this before. Like, how often do you trade your
very rare? Yeah, like very rare.
Like we're talking a few, if I understand correctly, a few sales over more than a decade.
Yeah, I think I sold.
You just sold a warehouse.
Yeah, I think I've sold a total of 9 properties in 12 years.
Yeah. And that's 9 out of 100 something plus, like 150 plus.
Yeah.
So think about that, right? Now imagine if, I don't know, let's say 5 or 6 years ago, you started trimming some of your portfolio, right? How much money would you have potentially left on the table?
Yeah, like tens of millions of dollars.
Tens of millions of dollars, and possibly 50 to 100,000 per property on average, maybe more, right?
Oh, way more. Well, if you look at even the last 3 years, I think in the last 3 years, the portfolio's like probably doubled at this point. I haven't even updated like the values of it now. I don't even know what it's at now.
Yeah, you probably have a lot of extra leverage.
Like 9 digits now. Yeah. You know what I mean?
Now, let's talk about, I think one of the biggest contributing factors to why people sell is, and I talk about this more than anybody, and we both do, but it's the belief that they can time the market, right? It's the belief that the crash is coming. I'm up X amount of money. The market's about to crash. I'll sell it now. I'll buy back later at a discount. I'm smarter than everybody. I've been watching people do this for 3 or 4 years in a row. And all these multifamilies, all these single families that either myself or my clients or my buyers or yourself have been buying, I've been saying in my head, like, whoever's selling this is stupid. If you're stupid, if your mentality is you're selling it because you think you can time the market, then you're stupid, right? If there's other reasons for selling, then you can't call it stupid. But if you think that this is the top of the market, which people have been saying every year for the past decade, and more specifically the past 3 or 4 years, then I think that's just the wrong mentality. And you're going to, in my opinion, you're going to cost yourself more money trading in and out of assets than you would in an actual crash. Yeah. Right?
Absolutely. So I think we should get into what are the reasons for selling, or why would you actually want to sell? So for me, the only times that I would be interested in selling are pretty much 2 reasons, maybe 3. Number 1, I think I can time the market. I'm just kidding. No, absolutely not.
So I was about to walk off this podcast.
No. Number 1 is to get into a different type of asset, okay, or another asset or another opportunity. Number 2, you need the funds for whatever, maybe 1 and 2 can be, loosely tied together. Maybe you want to get into another asset. Maybe you want to get into another business venture, or, whatever the case is. Or number 3, the return. So I'll give you an example. So right now I have a lot of property that was purchased for, at this
significantly
point,
less than it's worth now.
Significantly less than it's worth now. The problem that I'm running into now is the equity that I have in these properties cannot be leveraged. And the reason why it can't be leveraged is because I have tenants in these properties for significantly lower rent. And because Canada restricts, at least Ontario, I don't know anywhere else in Canada, but at the very least, Ontario restricts what you can increase rent by. And let's just make this clear. Last year it was 0. You cannot increase rent according to what the market's doing. So rent is basically, it's restricted to what, even inflationary rates?
Yeah, typically 1.5 to 2%.
It's a joke.
Usually. Yeah.
So right now, I might have some property, I do have property that I purchased for 180 grand. It's worth 600 now. And I have, hundreds of thousands of dollars in equity in these properties, but I'm only getting X amount of dollars in rent.
Because your rent is like $900, market rent's $1,700, $1,800. You're at $900. You can't raise the rents. The banks will say, well, we can't give you refinance your property for 600 grand now unless you get those rents up.
Exactly.
Because it's also probably because you have a big portfolio. A lot of it's commercial loans. They're now, a lot of it's leverage and stuff like that. So you're basically trapped. Like you have a lot of value that you can't access, and accessing
tons
leverage is very important to real estate. And if you can't access that, you might be better off selling the asset, accessing your full $600,000 of equity, and then go buying something at market rents where you're going to make a higher return.
Exactly, or going to a different market or whatever.
Sense.
So I'm actually at like a crossroads right now where I may very well consider dumping a significant portion of my portfolio that is like underperforming. So,
but here's the thing, right? This is not out of fear.
No,
it's not out of trying to time the market. And here's the thing, too.
I really don't want to either, to be honest with you.
We've talked, you've struggled a little bit. And here's the thing as well, I want to point this out. Like we always say, you're cautiously optimistic. You've actually sometimes had a very negative view of like the market. We don't, and I agree in a lot of ways. Our market is not based on great fundamentals of job growth and et cetera. It's immigration and low supply. So you've talked about that, yet at the same time, despite those things in your mind and that fear, you still aren't selling your portfolio. I want to point this out to people. You can, like, I don't love the things that are happening right now, but I know I just have to stick with that mentality of buy, hold, and over 50 years, I'm going to make more money than than it's worth now. Like, it's very simple, right? So just got to point that out to people.
Even if it wasn't for me aggressively pursuing opportunities in the States, there's no chance I would be selling right now.
Yeah, because what would you be getting into, right? Like what
I'd be getting into the exact same shit for a higher price point. I would rather just wait. To be honest with you, I'd rather just wait it out. Eventually, the tenant base will churn. And
it's inevitable.
And
how many times have we talked about the worst case scenario for a real estate market crash? Historically, we've talked about 8% in the US.
Yeah, it was like an 8 or 9% drop in 2008.
Even take a bigger one. Take a 25% drop. Like, is it really that big of a deal? Like, let's say a temporary 1 or 2 year.
Yeah, because like when you actually think of it, so say for example, if I bought a lot of, I bought a lot of property. I bought a lot of property in 2020, a significant amount, but the properties that I bought in 2020 were like very large units. I bought probably the majority of or a lot of my property as well. The last time was probably 2018. So I bought a lot of property that was, I've got a scenario where a lot of the property that I bought was like in the $150,000, $200,000 range. And a lot of those properties now are worth like $500,000. And
like you have a significant cushion.
Yeah, that's what I mean. So even if the shit hit the fan and it dropped 20 or 25%, it's dropping $100,000. You're still like insanely in the positive. So I'm not really like, and you're not going to see all these people that are waiting for like this crash that is going to bring prices back down to like 2008 or like 2000. Like it's not going to happen.
No, it's impossible.
Like at least from my perspective, I do not think that that's happening like at all. Nor do I actually think like a crash is going to happen. And then like what you said, even in 2008, when there actually was a significant crash, overall nationally, the US only dipped like 8 to even call it aggressively 10%. Like that's a joke. That's nothing.
And it's baked into your 20% down. It's baked into like you've had a nice appreciation over the last several years.
Sure.
And then we've talked about as well, when the market crashes, typically rents don't drop in proportion to how low prices have dropped. And even that big crash, like a big percentage of that came from,
high-end A-class buildings or properties.
That's a good point too.
Like
the crash isn't spread evenly across all price ranges.
It'll hit the higher end luxury Class A stuff harder than it will hit anything else, because typically what you'll see during those crashes is you'll see Class A go to Class B, but you will never see, or you don't really see Class B going to Class C, and you don't really see Class C going up to Class B.
Good point.
You usually, it'll go from Class A to Class B, but you don't see Class B dipping down into C.
Yeah, and typically as investors, we're in that BC pool, right? Like how often are you buying A-class properties that, especially that don't cash flow healthily, right? Like it's almost never. And if you are buying an A-class, you have a lot of cash flow to cover.
Yeah, and that's another reason why you always buy cash flowing property, because when and if that does happen, you're at least covered.
Yeah.
Right? You're not going to be covered if you're buying property at like a 2 or 3 cap. Like you're going to get fucking hurt if shit starts to shift.
I agree. So basically you're only selling your assets if you have untappable leverage, or you need it to buy. Like I know we're looking a lot in the US right now. You were just talking about a property that you were looking at.
Yeah.
Some big prices. You're going to have to raise some capital, but you're not taking that money and socking it into the bank.
No.
Right? You're not going to lose money to inflation.
No.
You're going to take that money and immediately deploy it in another real estate asset.
Yeah. Absolutely.
Or maybe a business venture or whatever.
Exactly. Yeah. So those would be the 3. Either I'm buying another type of asset, or I'm investing it into a business venture, or I am looking to leverage the equity that I have in the property because the current scenario does not allow me to. Those are the only 3 situations that, or maybe a 4th if I'm like financially struggling for whatever reason, that would be another way too.
There might be a personal reason, right? Health or maybe a divorce.
Yeah, exactly.
Which we're not
job loss. We're not even talking about with respect, in this, but those are the 3 reasons. Yeah. Only reasons why
this is more like the psychology of selling.
Yeah.
There are times when you sell your assets for certain reasons, but you have to check your psychology first. If your psychology is wrong, then your sale is wrong, in my opinion. That's how I look at it. And I can say this as well. It's tempting to sell an asset when you're up several $100,000. It's tempting to take that money immediately and just take it off the table. Yeah. But here's the thing. This is another good quote too, but every 7 years, you basically will regret everything that you've sold. Like if you sold a piece of real estate within 7 years, you'll regret it. Whether or not a crash comes and then it starts to go back up, that 7-year cycle, you'll look back and say, shoot, I should have kept that thing. Yeah. Because of inflation, like people need to understand that inflation drives replacement cost up. As long as the population of Canada keeps growing, which it is because of the federal government's policy, it's very simple. And then as long as inflation keeps ticking up, which it always does. It's an unstoppable force. The government has a target of 2% minimum inflation per year. They're going to fight to make that happen. As long as those 2 forces are in play, prices of real estate will continue to rise. Like it's very simple. And we're not sitting here saying that the market's not going to crash or it is going to crash. We don't know. But what we're saying is don't try to predict those cycles. Don't over leverage yourself and ride those cycles out, because over time it's going to look like this.
Yeah. And you're not better. You're not better at guessing or predicting the markets better than like the most world-renowned economists. Like you're not doing it. Like forget it.
You mean Joe that works his day job and watches Netflix at night can't predict the market?
Yeah, exactly. And exactly. These guys it's their job to predict markets and they can't do it. Yeah. So who the fuck are you to think that you can do it? It ain't going to happen.
Like CMHC came out, predicted an 18% crash, reverse course. Now all of a sudden for this year, they're predicting like a nice healthy gain all across Canada. Like how did you were dead wrong. And this is like the Housing Corporation of Canada. They should be more in tune with the market than anybody. Yeah. And they were dead wrong. Yeah. So the problem isn't that they're right or wrong. It's the trying to predict. Exactly. That's the problem. I have to beat this into myself and people over and over again.
It is nice when you're looking at $500,000 that you can cash in on. But the problem is, what the fuck are you going to do with it?
That's the thing, right?
Because every second that it's sitting in your bank account, it's losing money. Oh, significant, especially now at a significant rate. Because inflation, even though the Bank of Canada has their heads fucking so far up their ass, they keep on predicting like, we're actually in good shape for inflation. Yeah. No. Go to Home Depot and buy some fucking wood, or go try to buy a car
Steel,
right now.
Copper.
Yeah. everything.
Any material, a
fucking
car.
Big Mac at McDonald's. It doesn't matter what you try to buy right now, because the shit that is actually open right now has skyrocketed in value. Not value, but like skyrocketed in price. Skyrocketed. Yeah. It's already here. Inflation's already here. And it is like rearing its ugly fucking head.
And that's another reason why you can't trust what the government tells you, because you think they're going to get up there and say, oh, hey guys, we've really mismanaged this economy. And now inflation's out of control. They're not going to do that. They're going to pick and choose what they say. They're going to use this metric to justify their stupid claim that, the CPI, for instance, core price index, which is milk, eggs, bread, and cheese. It doesn't include housing prices. So if you use that metric, you can say inflation's under control. But guess what? We all need a place to live. We all are trying to build to keep up with the demand for housing. And again, we always go back to this, but the middle class that don't understand this end up getting absolutely roasted because they have their money in savings. Or they've sold their asset 2 or 3 years ago trying to predict the market, waiting for the market to crash as prices keep rising because they don't understand that inflation's out of control. So because I understand that inflation's out of control, it makes me say, I need to keep my money in real estate because the building costs and replacement costs are rising so quickly that like, if I sell now, I don't know if I'm going to be able to buy back cheaper.
You won't. That's the problem.
Unless there's like a macro global economic shock that destroys everything. Well, then I got bigger problems to worry about than my real estate, right?
Exactly.
We're all going to be in big trouble. But based on the fundamentals we're seeing now, again, we're playing a game of poker. The cards are showing me that building costs are rising, population's rising, the federal government policies are pushing prices higher. I think I should own real estate. It's very simple.
So from my perspective, the only time that you should sell is number one, when you want to get into a different asset. Number two, if there's some sort of business venture that you need to get into and you need to raise capital. Or number three, your real estate that you currently own is significantly under leveraged.
Or number four, you're smarter than everybody and can predict the market. But if that was the case, why aren't you a millionaire already?
Exactly.
All right. So let's leave it at that.
Done.
Trigger.